Elon Musk getting serious about taking over Twitter. The billionaire says he has secured $46.5 billion in funding to buy the social media company, according to a regulatory filing published today. Musk personally putting up $21 billion of his own money, he says, as part of the deal. Morgan Stanley, Bank of America, and other firms covering the rest in a debt financing. That's basically a loan. Now, Musk also says he is exploring a tender offer to acquire shares directly from shareholders.
It's no longer news that Elon Musk, the richest man in the world, is attempting to take over Twitter by buying 100% of the shares. Yesterday, he made serious his offer by securing the money needed to take over the company. Musk, who recently became the social media company's largest individual investor, told Twitter's board last week he wanted to buy the entire company, but didn't say how he would pay for it. Now, in a new filing with the Securities and Exchange Commission, the billionaire Tesla CEO said he's lined up $4 to $6.5 billion to fund his offer of $54.20 a share. Morgan Stanley, Bank of America, and several other banks have promised to lend $25.5 billion to him, backed in part by some of Musk's Tesla shares, according to the filing. The document shows that Musk has received $4 to $6.5 billion in commitment to help finance the proposed deal. If he decides to go ahead with a tender offer, he will approach Twitter shareholders and offer to buy their shares within a specific time frame. He's still considering whether to launch a tender offer for Twitter, according to the filing. Given the lack of response, the filing said Musk is exploring whether to appeal directly to Twitter investors with a tender offer to buy their shares for $54.20 apiece. Musk has been cryptically hinting at this prospect, tweeting "Love Me Tender," the name of an Elvis Presley song, and apparently referencing F. Scott Fitzgerald's novel Tender is the Night. Welcome back to Savvy Finance, and big thanks to all our subscribers and viewers. Carl Lombardo, who covers mergers and acquisitions for the Wall Street Journal, joins CBNC News with Shepard Smith to discuss the latest update of the Elon Musk Twitter bid.
Twitter's board says it's reviewing the proposal, but it's unlikely to change their position, right? They don't want the deal. Why not?
I mean, if you're talking about the price, yes, it's probably that today's details are unlikely to change their position, but I do think we're in a very different place today than we were just a week ago when he put in his initial bid.
How
if you
so?
remember, the initial bid had no details about financing. Today, he has proved the skeptics wrong that he can at least come up with, the money he needs. He has the financing from banks and then $21 billion of his own cash, he says. So I think, if I'm the board, it's hard to argue with the fact that they're taking this bid a little more seriously this week than they were last week.
So where would Musk get the $21 billion he says he's willing to put up? Is it couch change that he can scrape up, or what?
The current thinking is that a big chunk of it would likely come from selling shares in his existing businesses. So that would be Tesla and some of his privately held ventures. Now, that would obviously be a pretty big transaction and not one that most people take lightly. So there is talk of him still maybe finding an equity partner to help lessen the load a little bit.
Musk could also try to acquire shares directly from shareholders in a tender offer, but Twitter sort of putting some interference in the way there. Is that a viable option, or how much more expensive does it make the whole possibility?
It's a very interesting dynamic. So can he launch a tender offer? Yes. Will he be able to close a deal if it's successful? Not currently. Right now he can ask shareholders, do you want to sell your shares at this price? They can say yes. But then because of this poison pill, which prevents him from easily owning more than 15% of the company, he'd really need the shareholder response to put pressure on the board enough that they decide to remove the pill and basically come to the negotiating table. So it's an interesting set of events that have unfolded here.
Also, Fox News contributor Douglas Murray says billionaire Elon Musk is clearly hungry to take control of Twitter, but the board is pushing back because members want to maintain their positions. Listen to him.
The board at Twitter, the shareholders at Twitter should have taken the money. Could have taken the money, as it were, because this was a very good deal. This was several dollars above the actual value of shares in Twitter. But the board doesn't want to relinquish its favorite toy. So they basically last week had this arrangement that threatened to flood more shares into the market. Elon Musk said originally he wouldn't do anything after the first offer. it's now clear that he will.
He said take it or leave it.
He said take it or leave it first time. Now he's clearly hungry for it. So he's offering to put in his own money and also raise money from others, private equity elsewhere.
How much of this is about bottom line in business, and how much of this is about control of a speech engine right now?
Oh, I mean, it seems to me that Elon Musk is hungry. And that's a very good thing. And that the board of Twitter are being exposed. You see, again, it was a very good offer he's already put on the table for shareholders, but the board want to retain their positions. Now, here's the other thing. If Elon Musk were to take control of Twitter, we would all be able to find out exactly what it is that Twitter's been up to in recent years.
Sure.
And of all the social media companies, of Facebook, of YouTube, and all of the really very dishonest things that they do and say that they don't do but actually do, the shadow banning and much more, the silencing of conservative voices, pretending it's not a speech issue, all of that would come out. And nobody is worse about that than Twitter. And all of Twitter's dark arts would become clear. And I think that's what the board are protecting. There is no other reason other than their personal status why they would be fighting so hard to stop Elon Musk taking over the company. He understands the central thing, which is that, as he said himself, Twitter is effectively the public square these days. People say, well, if you don't like Twitter, you can go to another platform. Not really that true. It has an incredible monopoly, and it is the place where politics is fought out, culture wars are fought out, much more so than any other platform. So he realizes that if the public square is effectively dominated by censors who pretend they're not censors and are highly political activists who can just chuck parents off Twitter if they happen to say something that's true, then that platform has become rancid. That platform has become corrupt, and therefore the public square is corrupt. Elon Musk knows that. I so hope he succeeds in this bid.
Well, then it would become a much better asset as well, and
yes,
you know, its value would skyrocket.
Absolutely.
What we're witnessing is a bit of a chess game in public, says Dale Sarin, an attorney who helped fitness company CrossFit avoid a corporate takeover as the company's general counsel in 2012. Musk's public prominence and ability to influence shareholders, Sarin said, it should be putting a lot of pressure on Twitter and its legal counsel. Twitter's board has come under pressure since some analysts say the stock's upside potential is currently limited. Goldman Sachs, for example, has a sell rating on the stock with a price target of $30 per share. Ironically, the investment bank is advising Twitter's board on Musk's takeover bid. It's unlikely that the board will find any buyer willing to pay much higher than Musk's offer price, according to some business commentators. The company's stock is currently trading at $4 to $6. Shares were up nearly 20% since April 4 when Twitter confirmed that Musk had acquired a significant stake in the company. Steve Forbes, chairman and CEO of Forbes Media, says if Musk withdraws his bid, Twitter's stock would collapse. The stock has stuck since it went public 8 years ago and has not been a good performer, he told Fox Business on April 15. On April 19, Florida Governor Ron DeSantis also weighed in on Musk's Twitter buyout saga, saying that his state would look into holding Twitter's board accountable for breaching its fiduciary duty by adopting a poison pill. DeSantis said during a press conference that the state and its pension fund owned some Twitter shares and the fund was likely harmed. What do you make of the Twitter saga, which has turned into a chess game from which the likely winner will likely be Elon Musk? Are you in support of Elon Musk taking over Twitter? Please let us know your opinion in the comments. Thanks for watching.